Yeah,
Page 109.
Yeah.
Transport operating statement.
We'll get there.
Oh, yeah.
Was there anything else you wish to discuss in the main council paper before we got into the attachment?
No, there was, Mr. Chairman, but I think at this juncture we do the recommendations and then we go into discussion on them.
So we
I think
actually.
we always get muddled up there because we.
So you want to move the recommendation?
Well, I think if we go into this, then we can. Do you want to go into this and then come back to the recommendations?
I think that's what we normally do, but yeah.
Yeah, we normally do that.
Yes.
Yeah, no, that's fine.
Yeah.
That's fine.
Otherwise, the conversation stops if we move and accept and
No, you're right.
we move on. So,
Oh, sorry.
sorry, hang on. So we had one first comp question here, and which will page 109.
It's got a bearing. If there's an error there, then we shouldn't be adopting the.
Oh, we'll get Mr. Collins to pick that up. And,
That one there is
Page 109.
direct charges.
The point is that for the revenue to decline in a period of greater utilisation and, in fact, fare increases, is just not.
No, it's the question, Councillor. It's too low because the extent to which we get bus fares is hundreds of thousands.
Sorry.
Are you saying the bus fares are not included in that?
Oh, they're there. There's the direct charges. I'm just saying.
No.
The figures.
No, the bus fares are not included in the way we do the accounting because the bus contract is net of the bus fares.
You're right.
They retain the bus fares and we pay the difference. It's
Okay, that's right. Well,
just a way of doing it, that's all.
What are the direct charges then?
Oh, I'd have to look it up, Councillor. Well, there's more than, it'll probably be pertaining to road safety. There's direct, we'd put that under direct charges or other revenue.
Yeah,
But we can get back with a more detail. I haven't got the exact project in front of me.
just generally, it's very much a precede statement, and it doesn't tell me as much as I would really like to know. Maybe we'll talk about that.
Do you wish to
for
add
next
something
year.
to that, Mr. Collins? Yeah.
I think. Sorry, there's room for us to add something else to that. This is what we statutory have to put in there, but we can write something else up or put those fee charges in addition. We can have a chat. And
I think that people who have an interest in this and would pay rates towards it would be interested to know what the actual revenue components specifically are, including the fares.
sure.
Yeah, thank you, Councillor. I think at the very least, and Mr. Collins will take a note of that, we can put a note down the bottom, the extent to which fares are also collected, and they're not included in the above figures because of the type of contract we have.
That actually specify the fares.
The quantum of the fee.
Right, thank you.
Councillor Scott.
Just coming back to the council paper under the attachments on page 37/16, refer to the unfavourable result, but in the attachment you actually complete and compare it also with the annual plan. Can you tell me why, for completeness, you have not actually pointed out that the favourable position of the annual plan is actually $250,000? This
Well,
is only the reforecasted.
Yeah, the reason I haven't done that, Councillor, is when we move into attachment 1 under section A, when we talk about operating, I cover both the reforecast and the annual plan. And my explanation there for the annual plan is that even though we have a favourable result of 250,000, it's because we picked up 350,000 and carried it forward. So it's a result we would expect. Yeah. The 96,000 against reforecast is the one that I regard as the more crucial and interesting one to councillors, because that indicates the extent to which management has been able to forecast accurately.
Mr. Chairman, that explanation is all very well, but that suggests that the carry forward was a one-off. Don't we actually end up with carry forward every year?
We do, but that's the reason for the 250 favourable. You know, as a variance, that is the reason
Yeah.
we are favourable, because we have carried money forward. Otherwise, if we didn't, then we'd have come pretty close to the actual plan budget. These reports are not easy to read, I must admit. That's why I normally take my time going through them and try and do as much detail as possible, so as I take you through that journey.
Councillor
I
Dick.
don't know about the people down the back, but I'm having a little bit of trouble hearing. Could we crank the thing up a bit?
How's that?
I can speak louder.
I think it's your
Get your microphone closer.
Okay.
Okay, let's get into the body of the, and I have cranked the volume up here a bit. Councillor Beerman,
Okay, so we're now dealing with the attachments.
with the attachments.
Okay, I've got a couple of comments, questions, Paul. The first is
Page, yeah.
page 48. I mean, I really like the idea of having graphs and so forth to clarify, but this is really hard to read, and it needs to be changed, because there are too many people like me who haven't got very good eyes anymore. The diagram on page 48.
Yes, yeah, thanks, Councillor. We had a long discussion of whether we put this in, frankly. It's something that's been around in the days of community outcomes and what our goals are and how it leads out into groups of activities.
Yeah, no, it's look, people's brains work in lots of different ways, and some people can read tables, some
Yeah.
people need prose, and other people find it much easier to look at graphs and diagrams and so
Right.
forth. So showing these things in different ways is a really good idea. It's just that's really hard to read.
Perhaps, I think you raise a good point, maybe we make it larger if it's going to stay in there. I think what you're saying is make it the whole page.
Whole
yes.
page, yeah.
No, that's
So
always,
that was my first
yeah,
point.
because it's sensitive.
Second point, starting a few pages later, is the detailed reporting against our plans, and I think it starts on page 51 and proceeds for a number of pages. And it's quite interesting to read through the stuff. So we have level of service statement, level of service measure, performance targets, etc., and then a commentary on how we've gone. I'm wondering, is it possible to relate this back to the 10-year plan, which is where it originates, by having some sort of a cross-reference in there? Is that possible or not?
Well, a lot of these performance targets have been picked up from the 10-year plan.
Exactly. So
Yeah.
what I'm wondering is whether there couldn't be a cross-reference to that.
Oh, you mean a statement that these performance
just-
targets have
Yeah,
formed the
brackets,
basis
page
of...
2, 10-year plan, or whatever it is.
Some of them have been modified when they have moved into the annual plan. They go from
Yeah.
the 10-year plan,
Yeah.
and we're carrying it through to an annual plan. And bear in mind, it's the third year of the LTP.
Yeah.
For this
Can
one,
I flesh this out a
Some of
bit?
them
So
have been
for
changed.
what purpose
Well,
because it would be quite a body of work.
I'm a novice, right? So you get the 10-year plan, and that's one piece, and then you get an annual plan, and that's another piece, and they're not very well linked together. And I'm thinking it might be quite helpful to understand that they are integrated if there are cross references, so that you can see where these things come from in the annual plan.
Well, perhaps we could state, we could make a reference to in the introduction, a reference to the LTP and the pages of the LTP that incorporates this information.
Yeah, that's what I had in mind.
But,
Yeah,
but it would be done, and a person would then go to that section or
correct.
page.
Yeah. Or you can go back and see how it's been modified or whatever. So
The
that was my second comment. The third is, if you go back to the financial reporting benchmarks, which start on page 42. And there are several pages that, try as I might, I haven't got a clue what this is saying to me. Can you please explain?
Do you want to have a whack at that, Mentor?
Thanks. Right, so these are new reporting benchmarks which have come into effect this year, which the DIA has devised would give the public comparison between councils. Sorry, Department of Internal Affairs, is that correct? So each and every council will be having to report on these exact benchmarks, And then because that's caused quite a bit of concern within councils, rather obviously comparing different councils with different councils doing different things, run in different ways. So the notes underneath those are meant to give more indication of how we compare to these. So we have to put in exactly what has been said. So we've tried to explain those as best we could underneath those. So it probably doesn't help say why have we got these, but we could run through, I guess, what they were trying to achieve through each of these, if that's helpful. I guess the first, they want to have a look at rates, and these are all compared to LTPs, which is another thing which is a little bit contentious. And so they've said compare it to LTPs, not annual plans, where we revise LTPs.
So this is comparing it to our LTP, not general?
Correct, yeah. So this is all just us, but it will be compared to other councils. So they want to have a look at what you said you would charge for rates and what you actually charge. That's the first one. Right. So they've called it rates, income, affordability. So it basically, and the colours involved, you have got colours there, yeah. They've kind of gone for a traffic light. If it's green, you've met the standards, and the standard being you've charged the same or less than what you said you would, and orange says that you've gone over that. So we've got a little bit of a mix in there, and the reasons for that are you can set a rate, and so the couple that we've gone slightly over on, we've set a rate, but obviously you've got more rating units coming on board during that period, so you actually do earn more rates than what you said you would. So there's a couple of indications of that, and there's a couple of things that we've put, especially in the 2010, 11, 11, 12, where things were put into the LTP that we were going to rate for. Those have now been revised or changed. One instance of that was the Section 36 income was going to be a rateable charge. We've since then decided that no, that's going to be a direct charge. So we've got these differences which we have to explain as we go through. So yeah, hopefully that is an explanation, and these are a little bit of a work in progress. Audit themselves have not got their heads around exactly how these will look. So this is our best draft at this stage now. Audit will go through this with fine-tooth comb and tell us exactly what they want across the board, but effectively this is what the statute said.
Fair enough, yeah, Councillor Belford.
I think I had the same set of questions about this page 42, and I thought perhaps it would be helpful to, my question was, where did these benchmarks come from? Were they in some strategy document of ours or what? And I think just the introductory paragraph to this section could be a lot clearer that we are, in this case, complying with some standardized set of reporting requirements. Because it wasn't clear to me whether these were our own benchmarks that we were meeting or not meeting, or some externally provided benchmarks.
Mr. Chairman, I take Councillor Belford's point. I think we should make a reference there as well. But in the Chief Executive's report, we did draw to people's attention on page 34. Page 34, where we allude to financial reporting benchmarks and how they arose, and the financial reporting and prudence regulations that require it. So I take up Councillor Belford's point. I think we repeat it. We repeat it for people when they get to that page, so they've got some continuity. That's page 34. Page 34. At the top.
It becomes confusing though.
Yeah. I'll link
this. Councillor Dick.
Yeah, Mr. Chairman, Councillor Bevan's suggestion that we should link back to the annual plan, to the 10-year plan, I've just got some reservation about that in terms of complexity, the work involved, and also the fact that whilst the 10-year plan is a foundation, the annual plan overtakes that, and this is an annual plan report.
So I just have a feeling that you just may make your reporting too complex, too time-consuming as far as staff commitments are concerned, and also you're ending up with something that's not really making that very much sense. It's a reservation I've got.
I'll just make a comment to that. The way the tables are reflective of what was in the 10-year plan, and where there have been modifications, they are normally highlighted by being in italics. So maybe we just need to sort of put a note there up front that where you do see italics, that reflects a change from the 10-year plan, and that will cover off your concerns, I think.
Does that satisfy your?
Yeah, no, I certainly wasn't wanting to create a burden. What I was wanting to do is to have a cross-reference. So, and I would have thought, since you pick it up out of the 10-year plan, to just, give us a reference as to where it is in the plan wouldn't be a huge deal.
Well, Mr. Chairman, I thought that was my understanding from what Councillor Bevan had. He started with individual references, but then he was happy to, for the introduction, to say this is taken out, for the majority taken out of the long-term plan. It's in this part of the annual plan, and it's that part of, so as people can, if they want to, they can go straight to it rather than...
Yeah, exactly, and the clarification that Helen's suggesting with regard to changes would be fantastic. Would be good.
Yeah.
Okay, a few more questions here. Thank you, Councillor Graham.
I just had some questions on the balance sheet.
Which page? Sorry?
Page 17. I'm interested to know, just firstly, when the 10 million that we've given to HBRC at the 30th of June, it's our intention to capitalise that. When are we going to capitalise that? Because I'd be interested to do that because it is part of the total investment that we intend to put into the Ruataniwha Dam, and if it's going to increase, then that's part of the total capital. So I know they do want to capitalise it, and so my first question is when. The other thing is financial assets, which is cash. So we've got 4 million on the current assets, and we've got it really occurs twice. So 74 million, which I presume is the won't be 74 now, of course, because we only said 80. So 4 million of that's going to drop off. I'd just like to see it as an asset that we're going to put into the dam. There it is, and the rest is, of course, for other things. There's another 4 million there. And I'm quite interested why we have it in the two places. So we really have three cash amounts, why some in the current assets and why some in the why non-current assets and why some in, so firm asset, and why some is in current assets.
Mr. Chairman, I'll pick up on the first one, and then Mr. Collins is eminently capable of talking about financial assets, which is confusing, I must admit. The first one, the 9 million here, when do we capitalise it? We will capitalise that... 10 million. That will be capitalised on financial close. So financial close, all conditions met, the investment is a goer, then we capitalise it, and it'll be capitalised in HBRC's books as well. If the investment, if at financial close the investment doesn't proceed, then there's another action that will be needed. We'd need to look at how we dealt with that write-off.
Is there a suggestion that we capitalise anyway?
No, I don't think from an accounting point of view, no. Have you had discussion with the auditors on that?
No, not as such.
No, I know that in the HBRC accounts it's not capitalised, and the auditors have already been through that account. So when you're combining both sets of books into one, then it comes across as an item to be capitalised. Yeah, but my understanding is that personal understanding is that we wouldn't capitalise that until the investment was given the green light, and then it's an asset.
And if the investment doesn't happen?
This council would have to look at a write-off.
So the financial assets, which are essentially cash, outside of that, So the financial asset's 74 million, so 70 plus 10 is 80, so you've got 4 million that you could actually put somewhere else here.
Right, if I may, I'll talk. The financial assets are a little bit of an accounting concept, really. So you could just add up those three, and that is our cash that we've got in the bank. But we have to separate them based on their maturity dates and things like that. So we've got a chunk of term investments, which are currently holding that 80 million that you're talking about, the 75, or wherever we're at with that. They are holding all of our term deposits, and based on their maturity dates is where they end up on this balance sheet. So if it's over, I think it's between 90 and, I need to get this exactly right, but I think it was over 100. I think it was over 90. Let me think. Over 90 days, then it becomes not cash; it becomes a financial asset, and then if it's over a year, it becomes a non-current asset as far as maturity date goes. So most of our term deposits we've got kind of rolling on a reasonably short term at the moment, because we're not 100% sure if things go ahead when that money will be needed. So it's reasonably short term, between 3 and 6 months, staggered to try and get the best interest rates obviously out of those. But those are where they have to sit as an accounting treatment in our books. And so adding all up those cash deposits of what we've got, that is not only our cash set aside for the dam and things like that, it's also all our reserves, scheme reserves and things like that are also incorporated in there.
So it's 97 million.
Yes.
And if we don't capitalise the other 10, it's 107 million.
We don't capitalise it, you're quite right. Councillor, on page 21, if I could refer you to that, those three balances have added up, and Manton's shown there all the funds that roll up into that. So that's quite a useful document, and shows you we have quite a lot of reserve funds, but the main, if you're on page 21, the main one is sale of land investment, which is 70 million, and that's fourth from the right-hand side.